Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 20th of February 2020. And this week we've published two important videos. The first, gold and silver extends gains, but for how long? And the day before, why gold hit $1,600 and silver $18 today. Now, at the time of those publications, gold hovered just above $1,600 and silver just above $18. Whereas at the time of this one, we're looking at $16.21 gold and $18.38 silver. What is surprising to many is that the dollar is literally heading not only higher, but to its highest level for a number of years. Now, earlier today, we published or released from the Inner Sanctum a video we carried out with Eric Townsend, which was part of 3 videos, where we discuss gold, silver, and the strength of the dollar, and we've placed links in the description box below. The overall contention of Eric was that the US dollar index could potentially rise back to 100 or even higher. And this was when the dollar was considerably lower than it is today. Now, we have taken the view, and regular listeners will be aware, since really the channel began, that the dollar strength would continue. So rather than witness the demise and crash of the US dollar, which the Schiffs, Maloneys and Morgans of this world have been predicting for years, if anything, we're going to see an increasingly stronger US dollar, which, at least compared with its counterparts or international competitors, if you like, will reign supreme for some time yet to come. Now, today we have the dollar index standing just shy of 100. In fact, it's currently 99.83. And we thought we would share 2 articles with you, which have been published today. They're relatively short, so please bear with us. Let's listen to these 2 articles. PoundSterlingLive.com article dated Thursday 20th of February at 1400 GMT, written by James Skinner. Headline: Pound to dollar rate breaks down as greenback reigns supreme in risk-averse foreign exchange market. The pound to dollar rate is at risk of an imminent technical breakdown that could soon take it back to levels not seen since October, as King Dollar continues its reign of supremacy and is tipped for more gains up ahead. Pound sterling had initially risen against the dollar on Thursday after January's retail sales data revealed signs of a post-election Boris bounce in retail spending, but gains were swiftly pared away, with the British currency sinking to a fresh 2020 low as the dollar advanced on all other than the Swiss franc. Thursday's price action is bad news for sterling-denominated buyers of the dollar because it puts the British currency on course for a decisive break to the downside from a multi-week consolidatory range, and a daily close beneath $1.2863 on Thursday is tipped to open the door to further losses. Quote, failure at 1.2872/63 recent low and support line would put the 55-week moving average at 1.28 and the 200-day moving average at 1.2691 back on the plate, unquote, says Karen Jones, head of technical analysis for currencies, commodities and bonds at Commerzbank. Quote, the overall pattern looks like a potential falling wedge or continuation pattern, but this will only be confirmed by a close above the short-term downtrend. This would then confirm the move higher, unquote. Jones and many others had looked for a continued climb in the pound this week, as it appeared to be forming a falling wedge or continuation pattern, which would have signaled gains to 132.85 were in the pipeline. However, a daily close above 131.02 was required to confirm the signal, and sterling has since retreated and was trading back at levels not seen since November on Thursday. The pound could yet resume its upward climb, but much depends on price action as the clock strikes midnight Thursday, with a daily close below 128.72/63 seen, indicating that October's pre-Brexit deal levels are again a prospect. Quote, "The United States dollar remains the standout currency of choice." End of article. Bloomberg article dated February 20th, 2020. Updated at 1:55 p.m. GMT. Heading, US dollar nears a critical level that may trigger a buying spree. The spread of the coronavirus has suddenly sparked foreign exchange traders into action. The dollar is emerging as the winner, heading towards a key psychological threshold that could supercharge a rally few saw coming at the start of the year. At the other end of the spectrum is the yen, which suffered its biggest two-day loss since 2017 after the threat of a Japanese recession sent hedge fund buyers fleeing. The move spurred gauges of volatility, which had been lying dormant near record lows in recent months. What's going on in currency markets is, quote, "mad, bad and very ugly," unquote, said London-based Kit Ukes, a strategist at Societe Generale SA. It looks like huge capitulation by almost anyone who isn't a dollar bull. The greenback is outperforming virtually everything so far this year, confounding expectations that it would weaken following a trade deal between Washington and Beijing. The US dollar index, a widely watched gauge of the currency versus its major peers, has surged this week towards 100, which hasn't been breached in nearly 3 years. It is the level that capped the dollar twice in 2015 and effectively offered support during the first quarter of 2017 before finally giving in, heralding the greenback's sharp decline that followed. Quote, "The 100 level is a big deal," unquote, said Neil Jones, head of foreign exchange sales to financial institutions at Mitsuo Bank Limited. A number of buy signals will kick into play. It will set the alarm bells off. There's more good news for dollar bulls. The index's moving averages are close to forming a so-called golden cross when its 50-day measure rises above its 200-day equivalent. It would be the first time since 2018 and a sign to some traders of more gains to come. The pattern formed 13 times since the turn of the century, heralding average gains of about 2.5% in 40 days. While the dollar revels in its traditional role as a haven, the ferocity of the moves have turned other well-known paradigms on their head. The yen, which has long served as safe harbour from threats ranging from the Greek crisis to the US-China trade war, has suddenly found its power drained. The coronavirus threatens to further weigh on a struggling economy, which analysts forecast will shrink to an annualized 0.25% this quarter, following a 6.3% contraction in the previous 3 months. Some option traders are betting the currency will weaken to 120 per dollar from 111.96 currently. Quote, "A sharp slowing in tourism from China will have an important negative effect on the Japanese balance of payments," unquote, said George Saravelos, a strategist at Deutsche Bank AG, which recommends investors stay long the dollar. Quote, "This is idiosyncratically negative for the yen, which no longer runs a good surplus," unquote. While only the Swiss franc could match the greenback among major currencies on Thursday, rising to the highest level versus the euro in nearly 5 years, other haven assets also rallied, including US Treasuries and gold, which touched the highest since 2013. Elsewhere, the pound slumped to lows last seen in November, despite strong UK economic data, and emerging markets were not spared, with the one among the biggest losers after South Korea reported its first coronavirus fatality. Quote, "The emotional seesaw continues," unquote, said Mark McCormick, global head of FX strategy at TD Securities. End of article. So, as you can see, not only is the US dollar rising, but once it hits certain key benchmarks, this could cause foreign exchange traders to plow into it even further, thereby causing it to rise well above 100. What is worthy of note, and where our discussion with Eric did not take full account of at the time, is that even though the US dollar strengthens, we can and now do have a situation whereby gold, and to a lesser extent silver, is rising too. And as we pointed out in our discussion with Greg concerning the coronavirus, the after effects of this are still not fully quantifiable and could potentially be more harmful to the global economy than the markets even now have factored in. If we were to make a prediction at this moment, based on the balance of probability, and it is dependent on certain criteria, of course, happening, and that is, if global growth is affected further, primarily because of the coronavirus, but not exclusively because of it, and as a result, or even the fear of the result of it, we find that the EU, China, and other major industrial nations start reducing interest rates even further, such will be the strength of the United States dollar. The Fed will have to do likewise, which is why we have stated all along that we do expect the Fed to reduce interest rates at least once this year. Not necessarily more than that at this stage, but certainly once, despite their protestations that they intend leaving rates unchanged. Thank you so much for listening. We hope that by releasing the Inner Sanctum video with Eric Townsend, we haven't sort of confused matters, but we wanted to alert your attention to the 3 videos that we published with him, where he made it very clear, particularly I suspect in the first one, if memory serves me correctly, that the US dollar should certainly not be written off. Not now. Also tomorrow, we shall be releasing what we've already published in the Inner Sanctum, and that is our 2020 silver price prediction, which we hope you will find most interesting and useful. But of course, having seen silver rise in recent days, who knows, we could be wrong. We don't think so, but we could be. We've provided links to various books, articles, and products in the description box below relating to all of these videos and coronavirus protection. So until tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.